Today we are talking about Walmart and Walmart Plus and whether it's a buy coming up. Welcome back to the channel, guys. Thank you for coming back. I know it's been a while since I put out a video. It's just been kind of crazy around here doing a bunch of different things, but thank you for returning. So I wanted to put out a video today of a stock that I've just kind of been watching during the pandemic, and it's Walmart, ticker symbol WMT. I kept an eye on this one because back in 2008, during the last kind of great recession, I remember listening to the news and the news talking about how good Walmart stock was, that it was basically always performing well in recessions, and I was really curious to see if that happened this time during the pandemic. I kind of wanted to see whether Walmart would repeat the same performance that they did in 2008. Now, I'm also going to talk about Walmart Plus. I know that's kind of had a little bit of excitement around it. If you want to skip to that part, the bookmarks, as always, are in the description of this video. Now, first, let's just jump into a very, very quick history of Walmart. I'll put it up on the screen. So it was started by Sam Walton in 1950. Sam would slowly build the Walmart and Sam's Club sets of stores by buying other less successful department stores. The way he made money was by selling more product with smaller margins on those products than his competitors. So this was a very successful model for Sam. In 1988, Sam steps down and David Glass is appointed CEO. They also branch out into car service, photo studios, optical centers. So basically started the Walmart Supercenter type of model. In the 90s, Walmart starts to expand rapidly by incorporating tech into its business and supply chain. In 1993, the international division is formed and Walmart continues to expand into states like Alaska. In the 2000s, Walmart expands into Japan and other international markets, but by 2006 has exited South Korea and Germany. It weren't too successful in those countries. However, it's still worth noting that Walmart still has a huge international presence. There are stores everywhere here in Canada, so they're still very healthy internationally. So up until today, Walmart has enjoyed steady, growing income for the last decade. And this year, it's had a little bit of up and down, but we're going to discuss that in a bit. Okay, one more thing that I should mention is that 2009 was the year that People of Walmart, the website, started. Maybe not intentional for Walmart, but the entertainment value is priceless, so we got to talk about that. What I want to draw your attention to, however, is 2008, because a good indicator of how a stock will perform is by looking at how it did in the last recession, and fortunately, we have a lot of history on Walmart. So as you can see, it surged. It actually did really well that year. You can't even tell from looking at this chart that it was in a recession. And I remember that because it was one of those brands that news kept saying just does really well. Now, in a recession, people are trying to save money. That is their main concern. They may have lost their job. They may be living paycheck to paycheck, or they may be feeling a little bit threatened that they might be out of a job soon. So they start to sort of stockpile cash, hopefully. So people look for ways to save money, and that's kind of, I think, why Walmart does well in these recessions. They're just quick and cheap, and they let people save money and put a little bit more in their pocket. A very similar thing happens in real estate. If the economy is good and everyone's making money, people will be looking for those luxury homes, maybe spending a little bit more than they normally would. But when times are tough, people may not necessarily stop shopping for homes, but they may start to look for something cheaper, and those people that are in the higher price brackets start to squeeze into the lower ones and keep the demand of the lower price bracket high, while the demand of those luxury homes starts to suffer. So it's a similar thing to, I think, what happens in Walmart. So has Walmart performed well this year during COVID? Well, so we can see it's actually doing quite well when it comes to stock price, and I'll get into why this might be related to Walmart Plus in a bit, but so at its current price, here's what its ratios look like. Okay, so at the time of recording for this video, Walmart is at $129.65. Its dividend is $2.16 for a yield of 1.67%. Now, I wouldn't be holding Walmart based solely on its dividends. I would consider Walmart more of a steady blue chip stock that has kind of a dividend as a bonus. 1.67%, if you're a dividend investor, you can probably find some better deals out there than Walmart. It's got a big market cap of $371 billion. Its P over E is 24. The PEG ratio is 4.53. You usually want a lower PEG ratio. A PEG ratio lower than 1 would mean that its growth is faster than its P over E, which is great. Looking at the industry, this number for supermarkets is about 2.61, so the PEG is a little bit higher than maybe some of its competitors. Another thing to know is that its operating margin is a little low at 3.9%. Usually what you want to see here is, I'm not as concerned about percentages, but the fact that it's decreasing. So it's on a bit of a decreasing trend from previous years. But again, it's not maybe something that you would totally dismiss this stock over. It's got a price to sales ratio of 0.7, which is great. Under 1 is always considered excellent. Price to book ratio of 4.97. Usually you want something 5 or less here. And it's just under the 5 mark. It's not, you know, fantastic, but it's okay. I just made it yellow because it's just under the 5. Current ratio of 0.77. Now, normally this would be a red flag for me because that means there are more liabilities than assets, but I compared this to a competitor such as Target, and Target is right in the same ballpark. Right now, they're just over 1. They're at 1.01, but Target has also historically been at 0.8 or less. And I looked at the history of Walmart, and they're typically in this range. They go from 0.7 to 0.9. They kind of bounce around. So it's nothing out of the ordinary for Walmart. Now, if you are doing the dividend thing, free cash flow per share is 11.18 and the payout ratio is 50.76. These are pretty good percentages for if you're a dividend investor, so you're pretty much guaranteed to get a dividend. And the DGR streak for me is just the number of years that Walmart has paid or increased their dividend is about 15, as far back as I could go. So they're pretty dependable with paying their dividend. They have always paid it. There's only one instance 15 years ago where I found that they decreased it a little bit, but pretty dependable for a big company. So we can see from these stats that Walmart is doing okay. I mean, it's good to see some growing revenue in the retail sector when most stores right now are closing down due to online purchases, and they're being beaten up by Amazon basically. Now, Zacks.com calls this stock a hold, and I would tend to agree. If you have it, I would say hold on to it. It's definitely not a bad stock and has fared quite well during COVID. It's fairly pandemic proof. If you pick this up during the start of COVID, good on you. I think it's a great pickup. It's a very stable company. Now let's finally talk about Walmart Plus and this exciting new subscription service that Walmart is starting that seems to be getting a lot of media buzz as the Amazon killer. Oh, and before we do that, if you guys are enjoying this, please remember to hit the like and subscribe button to help this channel out and get this video out to more people. Appreciate it. Now first, let's just talk quickly about what Walmart Plus is. It is a subscription service offered by Walmart. It's $98 US a year and will essentially give you same-day delivery of your groceries and other things that are sold by Walmart. So they'll deliver directly to your house. And a lot of the media is saying to think of this as kind of the retailer's answer to Amazon, and everyone's making a big deal about this. Now, there's a lot of things that are playing to Walmart's advantages. They have stores all over the place. They have many more locations than Amazon does. So the multiple locations, the fact that the supercenters have all these different things, like they have groceries, they have, you know, coffee machines, you can buy oil for your car, you can buy anything at Walmart basically, it really lends itself to being very available and affordable for the consumer. Keep in mind that Amazon Prime is about $120, so they're trying to be a little bit more competitive than that. So I would agree, maybe for your everyday items, this is a pretty viable option. But here's my first problem with saying that this is an Amazon killer, is that your Amazon Prime membership includes all sorts of other things like digital books, digital audiobooks, subscriptions for music, subscriptions for movies, like it offers so much more than what Walmart Plus does, and so it makes sense that Walmart Plus should be a little bit cheaper. Now the question is, are people going to cancel their Prime memberships to get a Walmart Plus membership? Maybe not. Maybe they'll keep both. There are certainly some things I think Walmart can do better. Now, here is the thing from their quarterly report that I think is the big difference between Walmart and Amazon. And you can see here is how big of a chunk of their sales is from groceries. Now, Walmart has already got a grocery delivery service, but I think this Walmart Plus thing is basically reimagining that service and then adding all the rest of their products into that service as well. So over half of what Walmart gets in revenue comes from groceries, which is really important because that is not what Amazon is after. Amazon does offer delivery of groceries from Whole Foods, but Whole Foods doesn't have as many locations, not even near the locations of Walmart supercenters. And so I really see this as Walmart kind of capitalizing on a service that they provide and making it better. And then they're kind of throwing in the rest of their retail products as a bonus. So that's why I'm saying your everyday shopping might be better done with Walmart if you're a Walmart fan, but it won't be the big behemoth that Amazon is. The other thing is Walmart has a little bit of a different clientele, maybe a little bit older, maybe those that are looking for a little bit more of a bargain, maybe not the same as those that are willing to pay for the convenience of Amazon Prime. While Walmart will deliver cheap groceries, Amazon Prime is really focusing on Whole Foods, which are like the organic, healthy groceries. So those are two different markets as well. Some advantages for Walmart is that they have physical locations. So if you feel like you need to go return something or talk to somebody somebody about your order, there's actually someone you can go to and talk to, which will be nice. I think another thing that Walmart has going for it though too is that it has that brand recognition. People who've kind of stayed away from Amazon because it's a little bit of this impersonal virtual world might be more comfortable trying a subscription service from Walmart because it's a brick and mortar place they can walk into when they have a problem. They know that they can go talk to somebody if they have an issue with their order, so that could appeal to a lot of people as well. However, I do think these are very different demographics, and what Walmart's really doing is just improving an existing service rather than really taking on Amazon. I just don't think that that is something they would do. I do think this is a great move. I think it'll improve Walmart services, maybe bring a few more shoppers into Walmart or have people switch from other grocery services to Walmart, but I just don't see it being this big disruptor of what Amazon is doing. So my conclusion on this stock is if you have it, I would say hold it because it's a good thing to hold on to and see. The only reason I would buy this stock is if you really think that Walmart Plus is going to cause Walmart to grow in sales, which it may, but you really have to be a believer in Walmart Plus. The opportunity was really there in the middle of March to pick this up and get a good deal on it. Now, Walmart has a history of incorporating technology to stay current and stay modern, which is great. I think this is just an extension of that part of their culture. I think it's a great move. I just don't think it's going to be that crazy growth stock, that Amazon killer that the media is making it out to be. So we'll keep an eye on it. Maybe I'm wrong, but those are just my thoughts. Anyways, guys, that's all I got for this week. Next time, I will be talking about another very stable, staple stock that I heard about in 2008, kept hearing it being mentioned. So we'll talk about that one. The only clue I'll give you is it's got a little bit of a secret sauce to it. So stay tuned for that. Remember to hit the notification bell to be notified when that one comes out. Until next time, have a great week, spread the wealth, and I'll see you in the next one. Thanks, guys. Bye.